You have definitely heard of moving averages, right? Those simple lines that follow the trend, a classic tool from the old days. Back then, the Hall of Fame traders used moving averages to catch possible breakouts, and in some markets, it actually worked. But nowadays, moving averages cannot be fully relied on. They are mostly used to analyze long-term price movements rather than to pinpoint trades. But here is the exciting part. I've discovered a new type of moving average. It is still a moving average at its core, but it gives you so much more data. And the results absolutely mind-blowing. We are talking about consecutive winning trades with enormous risk-reward ratios. And the best part? This new moving average works in any market. Forex, stocks, crypto, it doesn't matter. And it's effective on any time frame, from 1-minute charts all the way to those slow-moving daily candles. So stick around and watch this video till the end, because I guarantee you're going to want to use this indicator in your trades from now on. Let's get straight to the point. To get this indicator on your chart, head over to the Indicators tab and type in Moving Average Ribbon. Click on it and you'll see a few lines show up on your chart. In the input section of the indicator settings, you'll find a lot of options. You'll need to tweak these depending on the asset you're trading. But don't worry, I'll show you my settings which work really well and are easy to follow. Here's the crucial step. Set the first 3 EMAs to 80, but leave the last one at 200. From my experience, this setup works best across most time frames and assets. As for the style tab, there's really nothing to change. The default settings are just perfect. This is the magical moving average we're going to use to create some serious trading results. The very first feature of this indicator that we're going to use is its power as support and resistance. The first 3 orange lines act as short to mid-term trend indicators, while the red line represents the long-term trend. It's the relationship between these 4 lines that create unbelievable trading opportunities, giving you a clear view of where the market might bounce, reverse, or continue its trend. In order to take long signals from this indicator, here's what you do. First off, the SMA 200 must be below the candles and also below the 3 EMAs. This simply shows that the long-term trend is bullish since the price is trading above the SMA 200. Second, just like any smart strategy, we want to enter on a pullback to the indicator. This gives us room to tighten our stop loss, which means we can go for higher risk-reward trades while keeping our entries precise. In this chart, the SMA 200 has moved below the EMAs and the candles, which tells us that the long-term trend is bullish, and from here on we can focus on long positions. We also see a pullback to the EMAs, where the price is forming a base. That is our entry zone. Just a simple signal, but notice the huge risk-reward ratio it offers. Here's another example. Again, the SMA 200 sits below the EMAs and the candles, confirming a complete bullish long-term trend. We got a pullback touching the EMAs, which corrects the previous move and sets the stage for the next rally. That will be our entry. Any touch of the EMAs after that can also serve as a re-entry point into a trade. 2 consecutive trades, all from a simple indicator. That's the power of this setup. The criteria for short position works in a similar way. First, the SMA 200 must be above the candles and the 3 EMAs. This shows that the long-term trend has turned bearish. Just like with the long trades, we enter on a pullback to the EMAs. This helps us avoid fake breakouts and allow us to tighten a stop loss, giving us a much better risk-reward ratio. In this chart, it's clear that the SMA 200 has moved above the candles and the 3 EMAs, confirming a long-term trend shift to bearish. Just a few candles later, we can see the pullback. That is our safe and tight entry into a short position, just giving us a precise way to ride the new downtrend. The great thing about this indicator is that with the right settings, fake breakouts barely matter. We can easily tell them apart from the real moves. If the SMA 200 is sitting between the EMAs and the candles, that is not a signal, neither long nor short. Of course, those fake breakouts can still be annoying, but don't worry, we're going to come back to them at the end of the video, and even turn them into trading opportunities. Right after that fake breakout, we see a pullback to the EMAs again. That is our safe entry for a short trade. This is the true power of this unique, modern moving average. Before we take this awesome technique to the next level for maximum profits, let's check out some backtesting on gold using 1 hour time frame. And remember, anything that works on gold will generally work across all the markets. One quick tip: at a pullback, you need to wait for a few small candles before jumping in. For example, here, a small bullish candle moves above the EMA, but the next candle turns bearish. If you had entered on that first candle, it would have been a small loss. Now, that loss is nothing compared to the huge profits you can grab from the signals this indicator gives, but still, these avoidable trades can be easily skipped with just a little patience. So we already know this indicator is powerful on its own, but we can take it even further. By adding another classic, unique indicator into our chart, we can maximize profits, create some safety buffer, and enter trades with much more confidence. The second indicator I'm going to show you isn't just useful for this strategy. It can enhance any strategy, whether it's indicator-based or price action. Truly a masterpiece. To add it, go to the Indicators tab and type in Ichimoku Cloud, one of the most famous and widely used indicators in trading. Click it and it will pop up on your chart in its default form. For some modifications, open the settings. In Styles, uncheck everything and leave only the pull-up background. That is basically the cloud itself. You can adjust its opacity and color to whatever feels comfortable. In Inputs, set the leading span B length to 108. Click OK, and that's the cloud we're going to use to take our trades to the next level. This cloud gives us extremely valuable information about market conditions on any time frame and in any situation. It is primarily a long-term trend indicator, but it also acts as one of the strongest dynamic support and resistance levels at any point. This dual function makes it incredibly unique and powerful. For example, on this chart, we can see a breakout from the cloud, which had been acting as resistance. From that moment, a brand new uptrend began, pushing the price to much higher levels. So breaks out from this cloud are extremely important, highly reliable, and can be confidently traded. They also work perfectly as confirmation for signals from other indicators. One last point, the cloud actually projects ahead of the candles by 26 periods, giving us a future trend indication. In this case, the cloud is blue, signaling that the likely future trend is bullish as well. Now let's combine both the indicators to create a final powerful strategy. Here's the updated criteria for a long position. The SMA 200 must be below the candles and the 3 EMAs. There must be a breakout from the cloud. The candles need to move above the cloud resistance, confirming a bullish momentum. The future cloud must be thick and blue, signaling that the future trend is also likely bullish. These three conditions together give relatively safe and reliable signals. Check out this example on the chart. The candles have penetrated both the EMAs and the Cloud, signaling a reversal. The SMA 200 is below the EMAs and the candles, and also the future Cloud is blue. The stop loss just goes below the Cloud, and you can ride this trade as far as it goes. The exit point is when the candles fully enter the Cloud, because that indicates the bullish trend is fading and the market is entering an indecision zone. Here's one more long example. On this chart, you can clearly see the breakout from the Cloud and the EMAs. The SMA 200 is below the candles and the future Cloud is blue. This is a long position you can take with full confidence. Now you can probably guess the short position criteria. The SMA 200 must be above the candles and the 3 EMAs. There must be a breakout below the Cloud. The candles need to break the support of the Cloud, confirming the moving average signal. And also, the future Cloud must be red, indicating that the future trend is also bearish. For example, on this chart, we see a breakout below the Cloud and the EMAs. But if you check the Cloud at that breakout candle, it is still blue, so we cannot enter a trade. The candles move a bit further and pull back to the Cloud. At that point, the future Cloud has turned red. Now we have full confirmation. Finally, we have a unique setup using 2 powerful indicators to help you earn maximum profits. But before we wrap up, let's quickly remind you about something annoying I just mentioned earlier. The fake breakouts. They can be a real pain. But don't worry, I've got you covered. In fact, in the very first video of my channel, I show you exactly how to spot fake breakouts, distinguish them from the real ones, and even trade them for profit. This is an absolute masterpiece and a resource that can supercharge your daily trading. I've left the link to that video in the description below, so make sure you check it out. If you got any questions, just drop them in the comments. You might get an answer. Until next episode, take care and trade smart.